What's up, guys? Welcome to episode 48 of the Block Exploring podcast. Here with me is Tommy, as always, and in this episode, we're going to go into the major dip we have seen in Bitcoin price, in the total of the crypto space, and the reasons behind it. Now, as always, none of the things we say are financial advice. And before we get into the meat of this episode, we're going to go into the state of the market to give you a bit of situational awareness and to show you that our mood and our insights do not depend on purely the market. We are bullish on the space and not per se on the price. So we will show you what we're thinking. Now, if you look at the price, or just the changes on 24-hour basis, 7-day basis, almost everything is in the red on the 7-day charts. That means Bitcoin is down 13%, going from about 42,000 euro price points per Bitcoin to 37.5 thousand euro Bitcoin price. Same thing you can see for ETH. ETH is on a major discount right now with 2.8k in euro price, whereas before it almost even hit 4,000 euros, and it's really down bad from its all-time high. Same thing for Binance, same thing for a bunch of these coins, Solana, all the major chains are down bad. And why is this? Well, two things, we believe. The situation in Kazakhstan and the Fed minutes of December 2021 becoming a reality. Now, I think the smartest move to discuss this is to dip our toes into Kazakhstan first, Tommy.
I think that's a good idea, especially in terms of discussing like what happened to the crypto market. It was all really quick. I think even if you listen to our last episode, you probably didn't get the sense that something like this, would happen, and that's generally the risk of the space that and well, trading in general, or dealing with different assets, is that like it's all interconnected into a bigger macroeconomic ecosystem of things where something like a civil war starting in Kazakhstan can
Yeah.
dramatically affect the crypto market, because what we found is that 1/8 of nodes Bitcoin nodes are actually found in Kazakhstan, with for cheap energy, the
Hmm.
weather. Like, it's just a good place to have Bitcoin nodes, and 1/8 of Bitcoin nodes were found there. So when the government did a internet shutdown and disconnected 1/8 of Bitcoin nodes from the network, that's 1/8 of the hash rate gone. Like,
Yeah.
and it only lasts for seconds, because it nodes are easily moved. When
Yeah.
China banned Bitcoin, all those nodes moved very quickly. But that
Hmm.
kind of thing can happen, and it can cause a lot of uncertainty in the market. Bitcoin hash rate is like a huge indicator of the actual efficiency of the network, how good the network is working. So 1/8 of that going down is a big thing. So Bitcoin would dip, and I think with that, everyone knows a lot of other things follow. The rest of the
Yeah.
space generally dips. So that's sort of
Definitely.
one suggestion or explanation for what's going on in the crypto market, but it's probably loads of different
Yeah,
things.
and I think it's interesting because if you tune into Monday's
Hmm.
podcast episode, you can see that we were saying like, oh, Glassnode actually just came out with some great on-chain
Right.
analytics. We went into the importance of on-chain analytics, how 3/4 of Bitcoin is now considered
Hmm.
illiquid because they're in wallets with no selling history and all that good stuff. But then, of course, black swan events still happen, and no matter how certain you are, these kinds of things still tend to happen. So, and of course, every wallet can always sell for the first time, right? And that's clearly what happened here in this situation.
I mean, it also just is a big warning to those who are considering liquid leverage trading, or who are leverage trading. The amount of
Hmm.
leverage traders who got liquidated by this, by this black swan event is is obnoxious. is obnoxious because it's incredible the amount of people who are trading minor percentage changes in price at like
Mhm.
1,000 plus uh, leverage. That's these Bitcoin went down probably only 2%, but that wiped out so many people who are way too over leveraged, and speaks to
Mhm.
not financial advice. Maybe well, it speaks to the risk of leverage trading because anything can happen,
Yeah,
and it's very hard to predict such an event.
that's true. And speaking about events that are pretty hard to
Mhm.
predict, the Fed, right? The Fed is also one of the reasons that we saw that might have caused this sell-off in
Mhm.
crypto and in big tech as well, because of course we focus on the crypto market, the crypto space, everything that happens, but we don't focus on stocks and all that stuff. But in big tech, there was also a significant sell-off. Now, why does this happen? Well, the Fed, right? It has a balance sheet, and what it's doing is called tapering their balance sheet. It means that they're selling off a bunch of stuff and they're letting that back into the market. And at the same time, they're going to start raising interest rates in March. So when this happens, it's not a good time for crypto because people are feeling that these riskier assets need to be sold.
Mhm.
And I believe that that is also what happened. And I think that's significant as well because we also see that the USA is buying up Bitcoin at the same time. So this this tapering of the balance sheets happens, this raising of the interest rates happens, and at the same time we see the USA buy
Mhm.
Bitcoin. What does that do for you, Tommy?
For me, it indicates a bit more hedging on the behalf of the government. Because it's almost inevitable for them to have to print more money and have to raise interest rates and such. But it's not like the U.S. government doesn't understand the reality of that Bitcoin could cement itself as a reserve currency of the world. And that's if Bitcoin succeeds with its mission, of course. And like they just want to hedge themselves because the U.S., right? They want to do what they can to make sure that they are still the power holders in globally. But
Hmm.
if that doesn't turn out how they like it, they don't want to be the ones who've lost as a result of the greatest wealth transfer in history.
Absolutely.
But yeah, it
Yeah.
speaks to the fact that they are active in the space. They are you know looking to deal with crypto, and no, it's very likely we'll see regulation in that vein in terms of in a way that's favorable for themselves because it's just natural.
Hmm. No, absolutely. And I think this well, if you look at the once again the on-chain analytics, right, you can see that the US is buying up some Bitcoin. I think it also shows how the duality of Bitcoin almost as an investment good because to a lot of people it's a high risk, high reward type of investment, just like big tech.
Yeah.
But then again, in a more diversified portfolio where you want to have these inflation hedges, these hedges against well adverse events that happen within the dollar or within just fiat currency, Bitcoin makes up a very reasonable part of a portfolio
Yeah.
like that. So it's pretty interesting to see this duality, especially, yeah, especially now that they start buying it. So I don't know. Maybe on the short term, this is very like unfortunate, this change in
Yeah.
price. But maybe in the long term, we might see some Bitcoin on the balance sheet of the
Yeah,
Fed. Who
and
knows?
what would that do for confidence in general? Would
Hmm.
that lead to a lot of companies then being feeling confident enough to hold Bitcoin on the balance sheet? Like if the Fed's holding it, obviously we should be able to hold it. That would
Hmm.
be interesting. And is that then when do we see the huge exodus of funds and institutions making their way to the promised land of crypto? But
Hmm.
we'll see. Like it's bearish times right now, but as long as you're building, you're probably good.
Exactly. And that's I think compared to the episode before this, where we were very bullish, it shows still the amount of effects that the outside world has on
Yeah.
crypto, and no matter what, it's not like like a change like this with a
Yeah.
hash rate or with a bunch of nodes going out of
Yeah.
commission for a hot second there. It shows how quick Bitcoin is to
Right.
recuperate
No, that.
as a
Mhm.
network, but from a price point, that the damage is permanent, or not permanent, at
Well,
least
the losses
it
people took
occurs.
is definitely permanent. But
Exactly.
yeah.
So it shows the power of the network, but then from a point of view of an investor, it also shows the vulnerabilities of the
Mm,
network towards price.
definitely. And as it matters differently to different investors. Like if matters definitely more so to the investor today who cares about price
Hmm.
today and making profit today, but the investor who's taking a long-term approach, this is the dip. the dip. The
Yeah.
dip that one
The,
buys, you know.
well, and if you look at the long term, if you
Yeah,
look at a long term perspective, this is one of the best moments to buy Bitcoin.
exactly. I mean,
If
not
you
financial
look at
advice.
like,
But
yeah,
yeah.
but we say it once, it I think it counts
Yeah,
for the
yeah, I
whole
hope so.
episode.
But yeah,
So it's not a subscription. We don't have to renew
yeah.
it.
Yeah.
But the Bitcoin right now is at such a good price point that if you put it on like a chart with like the last 200, 300 days, it's like a very nice point to buy it on. So yeah, at the end of the day, this also might incentivize a bunch of new investors to hop into the market. Hey, see what this Bitcoin thing is about. They might have missed this kind of bull run that we saw last year go on, and they might think, hey, might be a good moment to buy some and get acquainted with crypto, which at the end of the day is just positive for us. So yeah, and at the same time, it shows a vulnerability that is, I say, inherent to everything in crypto, right? And that is the dependency on the internet, which is of course inherent to crypto, right? Because it's Web3, etc. But if a country or some form of centralized authority decides to shut off the internet, well, then you're left with some issues for a hot second there, especially if you're a validator or a miner. Yeah. So it shows also maybe a need for a more decentralized internet. I don't know.
That's what I'm about, dude. We need Web3, dude. Decentralized internet with money, with built-in money, monies.
Hmm.
Yeah, yeah.
Yeah. And I think for today this episode will be a bit shorter than usual. I hope you guys managed to get some insight into why this crash happened, why this entire dip happened, and maybe continue tuning into our podcast episodes, because what we do here at the Block Exploring podcast, and I can't emphasize this enough, is we don't really talk about the financial advice. We talk about our legal perspectives. We talk about everything we think about crypto, the future of crypto, on a much less financial level and much more practical level. So, with that being said, I hope you gained a better understanding in the reasons behind this crash and maybe learned with us from this crash, because Tommy and I didn't see it coming. I think a lot of people didn't see it coming. This is what you call a black swan event. But I hope that it also motivates you to start building in the space, start seeing new opportunities, and yeah, well, continuing to listen to the Block Exploring podcast all through 2020. So, with that being said, tune into the next episode coming Thursday, and we'll see you there. Peace.